Welcome to the May 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of the 9th of May 2025, the global GDP growth for both 2025 and 2026 has been maintained at 2.8% by Oxford Economics. Notably, a pivotal trade agreement between the US and China on the 12th of May 2025, temporarily rolling back tariffs, marked a significant de-escalation in trade tensions between the world's two largest economies. This development could pave the way for a stronger-than-expected global economic outlook. In Q1 2025, US GDP contracted by 0.3% for the first time in 3 years, primarily due to reduced government spending and a surge in imports as companies built up inventories. However, US GDP growth for 2025 was revised upward slightly to 1.3%, with a modest rebound projected in 2026 at 1.7%. Meanwhile, the EU's GDP growth forecast has been maintained at 1.1% for both 2025 and 2026. China's GDP growth is projected to remain steady at 4.1% in 2025, before slowing slightly to 3.9% in 2026. In the first 3 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 60% of global gas demand, increased by 4% year-on-year to reach 775 BCM. Growth was recorded in the EU, UK, and North America, while Asia recorded a decline. Although cumulative first quarter 2025 growth was evident in EU, in April 2025, EU natural gas demand fell by 5.7% year-on-year to 22 BCM, marking the first decline after 7 consecutive months of growth. The drop was largely attributed to lower consumption in the residential and industrial sectors. Warmer than usual weather also played a role, as Europe recorded its 6th warmest April on record, with average land temperatures reaching 9.38 degrees Celsius, which is 1 degree Celsius above the 1991 to 2020 norm. Industrial gas demand also declined, reflecting a broader slowdown across major European economies. Total electricity generation in the EU increased by 1.2% year-on-year, reaching 193 terawatt-hours. The gas-fired power generation sector, which surged by 11% year-on-year, played a crucial role in compensating for reduced hydro and wind output, which was largely due to unfavorable weather conditions in the region. In March 2025, China's apparent gas demand continued to decline, falling by 3% year-on-year to 35.4 BCM. Gas-fired power generation declined by 2% year-on-year, as increased output from nuclear, wind, solar and hydro sources reduced reliance on gas. China's total power generation rose to 840 terawatt-hours, up from 797 terawatt-hours a year earlier, supported by higher hydro and nuclear output that reduced reliance on thermal power. In April 2025, US natural gas consumption increased by 1.6% year-on-year to 68 BCM, driven by increased demand in the residential and power generation sectors. In March 2025, global gas production grew by 0.7% year-on-year to an estimated 363 BCM. Africa, the Middle East and North America showed a positive production variation and counterbalanced the decline in other main gas-producing regions, including Eurasia, which witnessed the greatest decline, along with a decrease in European production driven by lower gas output in Norway. European gas production fell by 3.8% year-on-year to 16.3 BCM, the 5th consecutive monthly decline. This was driven by lower output in Norway, the UK, and the EU. However, the overall decline was partially offset by an increase in Turkey's gas production. In March 2025, China's gas production maintained its growing trend to reach 22.7 BCM, representing a 1.4% year-on-year rise. For the first quarter of 2025, cumulative output stood at 66.1 BCM, reflecting a 3.6% increase. Meanwhile, in April 2025, US total gas production maintained its growth, to record a rise of 3.4% year-on-year and achieve a monthly output of 89.2 BCM. This increase was supported by higher Henry Hub prices, which improved market conditions, in addition to the growing gas demand. In April 2025, the EU countries imported 12 BCM of PNG, a decrease of 9% from the level of 1 year ago. Supply from Norway has been increasing in recent months, supplemented by steady supply from Algeria. After the first 4 months of 2025, cumulative PNG imports by the EU reached 48 BCM, which is 10% lower year-on-year. During this period, Germany and Italy remained the top 2 entry points in the region. In March 2025, China continued to step up its pipeline gas imports, which reached 5.7 BCM, an increase of 2% year-on-year. Total PNG imports after the first quarter of 2025 increased by 7% to reach 19 BCM. In April 2025, global LNG imports reached 35.5 million tons, marking a 3.5% year-on-year increase. This rise was largely driven by Europe, which continued to serve as the premium market for spot and flexible LNG cargoes, particularly from the US. Europe's increased LNG imports were supported by reduced pipeline gas imports, declining domestic production, and low storage levels. In contrast, LNG imports in Asia continued to decline, with weaker demand in China weighing down the region's overall intake. On the supply side, global LNG exports grew by 6.7% year-on-year, reaching of 35.4 million tons, driven by stronger exports from Angola, Nigeria, Mexico, the United States and the United Arab Emirates. On the infrastructure front, 2 major projects reached FID, the 16.5 million tons per annum Louisiana LNG Phase 1 project in the US and the 2.45 million tons per annum Southern FLNG project in Argentina. Northern Hemisphere countries are in the phase of gas restocking. In the EU, the storage level rose to 41 BCM at the end of April 2025. This represented 39% of the region's capacity and is still 10 BCM less than the 5-year average. The European Parliament has approved extending the filling regulations to the end of 2027, relaxing the storage target to 83%, which can be attained at any point between the 1st of October and the 1st of December each year. In Asia, combined LNG stocks in Japan and South Korea were estimated to be 9.7 BCM, which was 1 BCM less than the 5-year average. In the US, the average daily storage level increased to 54 BCM, or 40% of capacity. Net gas injections in the US in 2025 reached 9.7 BCM thus far. In April 2025, spot prices in European and Asian gas markets continued to decline, accompanied by heightened market volatility. Both TTF and Northeast Asia LNG spot prices averaged $11.60 per million British thermal units, marking a significant 12% decrease month-on-month. In the US, Henry Hub spot prices saw an even steeper decline of 18% month-on-month, averaging $3.40 per million British thermal units. While the 2nd of April, 2025 announcement of new US tariffs intensified concerns about a potential global economic slowdown, persistently loose market fundamentals remained the primary driver of the downward trend in prices. Thank you for watching this short video presentation on the May 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.